with Ignite Payments. But what I like is he is a UCLA graduate. Welcome. They're having a good year, aren't they? Good year in basketball.
Yeah, I think they're ranked 4.
Yeah, they're ranked 4, but, they're up and down. So we're going to talk about credit card payment processing and what it, in the business hour, how other businesses, when it comes to picking a credit card processing partner, what they need to look for. So, sometimes people are offered a rate sheet or an actual payment processing program. Tell me how they should look at that.
Well, there's a lot more to consider when you're selecting a provider for your credit card processing than just the face rate. What the representative is presenting in the way of rate is only part of the equation. Rate structure, whether it's going to be a bundled rate or interchange plus an unbundled rate, which is the preferred rate. But moreover, you want a rep who's going to be your partner and do rate reviews on a proactive basis. So as your business grows, they're going to take that into consideration and make mid-course adjustments where appropriate.
So you said some words that are a little beyond my pay grade. You said bundled rate. What's that mean when you bundle rate?
A bundled rate, very often it'll show up on a merchant statement as what's called a qualified rate, a mid-qualified rate, and a non-qualified rate. And if you look at that as like buckets, so the bank or the processor will give you a rate that appears to be a really good rate, but in credit card processing, you have to qualify for a particular rate based on a number of factors. It's extremely complex, but suffice to say that if you swipe a card, if you're set up as a merchant to swipe a card and you take an order over the phone, that transaction is going to downgrade. Downgrade means that you pay more. Because there's more risk associated with taking that transaction
over the phone.
So
when I order flowers for my girl, that's more risky than if I went in and I swiped my card.
Well, it's not risky to order flowers for your girl.
Yeah, that's true. Good point. But for the merchant,
yes,
you're right. That's a very safe move. Or you're in trouble, one or the other, right?
Well, you're probably in trouble if you're ordering flowers, but that doesn't have to be that way. But when you're priced like we price our merchants on interchange plus pricing, that means that you're paying whatever the cost is for the majority of that fee is being passed through at cost. And then the fee is set by the processor at a specific rate, which gives you a better effective rate and passes through. One example of where this comes into play was about 10 years ago, not 10 years ago, about 7 years ago in 2010, the Dodd-Frank amendment of the Financial Reform Act was put into place. And as it relates to credit card processing, they limited the amount of money that a bank could charge for clearing a debit transaction. And the thought behind it was, you don't really extend credit when you accept a debit card. The bank's not extending any credit. You're basically giving electronic access to someone to their own money. And because that was limited by that amendment to the Dodd-Frank Financial Reform Act, it really reduced the fees that banks can charge on a debit card. So what that means is that was supposed to be passed on to the consumer. Well, it wasn't. And bundled pricing hides that and does not allow you to see what's being charged and allows the processor to make extra money on those transactions. Interchange plus pricing, you pay what that is supposed to be, and you pay a set rate over and above that, and it really works out better for the merchant.
So it's not based on like a percentage. Like let's say you're going to pay 2 or 3% or up 1.5% up to your first $20,000 or $30,000. It's not simple like that. You're saying it's so much more complex because there's different tranches the money goes down when it comes to different types of charging, the way things are charged.
Right. In other words, most merchants, when they get their statement every month, they do a quick ratio. They take their total fees and they divide their volume into their total fees, and they get an effective rate. And that's a good thing to keep an eye on. However, when you drill down and you start to understand that a card not present transaction costs more to process than a card present transaction. If you're set up as a merchant that's supposed to accept cards in a card present environment, then if you are someone that takes a higher percentage of card not present, then you're going to want to be set up that way. It's always cheaper to be set up with a higher rate than it is to do so with processing and then downgrading.
So what you're saying is you need to speak with your processor and really find out what your business style is, how you're going to take payments, and customize your solution to that.
Yes. Sometimes because our industry has grown so much, when I started in 1984, there were 3 companies that did this.
You just aged yourself, 1984. So you've been doing it for a while.
Long time. What's happened is a lot of people have gotten into the business, and a lot of them just don't know. Mm-hmm. And I've seen representatives set merchants up incorrectly, and it doesn't cost them anything. They make more because of that, the bundled rate. So if you reach out to me or my wife Effie, we are happy to help. And if it's nothing more than just doing an analysis of your statements, we're happy to do it. Just so you have a better understanding of what's available, and if you are looking to switch, we're certainly here to help too.
I love that. It's the attitude of whether you use me or not, I want to be your resource when it comes to evaluating your financial situation when it comes to this. I love that for a business owner. Business owners got a lot going on. They almost need a friend in the biz when it comes to this to help them understand it. That's not their salesman, because their salesman selling them something.
It's true. I would say 8 out of 10 merchants look at their merchant statements every month and throw it in the drawer. Mm-hmm. I know this from experience. I've literally met with thousands and thousands of merchants over the years. Very often I say, can I look at your statement? And they go in the drawer and they open the envelope for the first time. It's purposely complex.
It's perfectly complex. Well, the government probably created part of the industry, so that
what my wife and I do is we'll help you understand it. Yeah. So at least that way you know what you're looking at.
Like trying to understand your electrical bill.
It's even more complex than that.
Those that want to reach out to you, Richard, how can I get you?
The best way to reach us is give my wife Effie or me a call at 661-753-7847, and or you can email us at Effie, EFI, at moneydispatch.com.
I love that. You and your wife. Family business.
Yeah, we're a family, and 2 heads are better than one.
That's right. Love that. Love that. I hope you enjoyed this edition of the Santa Clarita Valley Chamber of Commerce Business Spotlight with Richard Litberg from Ignite Payments. This is your host, Fred Arnold, on AM 1220 KHTS.